Welcome back to the FX Blueprint. This is the brief. In the brief, we dissect the market. We look at currency pairs, and today in particular, we'll be looking at gold and the dollar, gold and the U.S. dollar, and then we'll also look at the euro and U.S. dollar, as you can see in front of your screens. That's a weak chat over there of euro and the U.S. dollar. We'll look at that, and if you see, just briefly, I've dissected the market of that. So majority of the euro and the US dollar is just going to be pure analysis. We'll play some great music, I'll let you guys know, and then it's just going to be pure analysis. We're going to fill it up with Elliott Wave analysis, because I believe right now in particular it's actually at the potential retracement zone. I'm just going to put a rectangle over this for now. We're going to look at it. It's going to make much more sense when we get to it. Again, it's going to be just pure analysis. In the next video, we'll capture the dollar index and have a look at where it's going or where it's been. This is a month that I'm viewing on the index right now. Just going to put a line just to give you guys an idea of some of the stuff we're going to be looking at. That's obviously going to be in the next video. Today, we're looking at gold. We did a very excellent gold analysis last video, and we're sort of looking at the market structure. Gold was obviously, still is structurally bullish on the higher time frames, and obviously the momentum has been cooled in short term. Sellers have sort of cooled the price down after we had a huge surge. So that's the correction of a very strong impulse. The last time we looked at this, gold was exactly right here where my crosshair is, which is 4,648. And since then it just shot up, had a huge impulse. When we analyzed, we said, hey, this is the region you want to be buying it at. We had already had our horizontals and everything. We knew it was establishing wave 5 because we had highlighted wave 4 from our previous analysis, and it just shot up all the way for about 8,976 pips. So an easy, I would say 0.01, as you see over here, easily got you $800. Easily, if your leverage is 1,000. So if your leverage was like 1 to 500, you would have easily made with those pips at 8,000 pips. That's an easy $400. Yeah, but the best one, the fastest one, 1 to 1,000. Obviously other folks trade from 1 to 50 depending on how much you have. But I would say 8,000 pips is a lot of money. You would have made that. And maybe you might have missed it on the down end, but in our analysis when we were doing it last time, we had projected this region. We had projected that, hey, this is the region where the market was gonna potentially retrace. We had highlighted, for example, 1618 all the way to 618, which was over here when we're looking at wave. The projection of wave 3. The projection of wave 3. I'm just trying to get rid of this Fibonacci. Yeah. All right. Let me just run that through again for those guys who just got in or maybe might have missed exactly what I was talking about. So the last time we looked at gold, it was exactly where my crosshair is at, which is 4,600. Shot all the way up 8,000 pips. I'm just going to put a price on these things. Let me do 4 hours. Put a price on it. Again, this is just an update of what had happened from our previous video and what has since happened from our previous video. Sorry. If I put a price on the left here, no. I'll put a price on the right. 5,585. That was not our peak because I'm pretty sure it peaked at 5,600 to be exact. 5,600 to be exact. Right about there. Yeah. It's not sticking. All right. So how would you have known that the price was going to get all the way up there? Since when we were analyzing, I'm just going to put a vertical line where we last analyzed this. You had no idea. So for example, the stuff on the right, you had no idea it happened. We were right here analyzing the market in our previous videos. And I'll pull that up here in a second so we can see exactly how we got there. All right, you had no idea this was going on. The market was right here. All you were trying to do is see how far the market was going to keep going. And you had already established that, hey, there's a retracement over here of 38.2 of 38.2. I'm gonna grab my crosshair and show you where it crosses around 38.2 is around this region. So you take your Fibonacci, delete it, and then make an extension of that wave. You can clearly see our 200 mark is obviously marked with our what? With a horizontal line. 161.8 is also right here, which it respected because the market when initially went up, if you watch my crosshair and pay attention to the Fibonacci levels, our Fibonacci predicted, okay, it estimated that the market will pop from here. This is the gap that it made, go all the way, touch 161.8, and then bounce on 141.2 before it goes all the way up to 200, where it respects the region and then breaks it all the way to 261.1.8. And that's where initially I would have taken my last profit. That's where I took my last profit. And then from there, whatever happens from this point on, you know, it's probably looking for a whole number. So you definitely know it's probably going to go to what? To 5,600. You know, if I put a day and we have a look here, we have our horizontal all the way here. It's almost all the way to pi. So I'm going to go back to 4 hours and I am going to delete my Fibonacci. You know, and grab my crosshair and say, okay, 161.8 was around this region. That's where you'd have taken your profit, and you would have obviously taken your profit at 161.8 too, right? 161.8 you would have taken your profit, and then your last profit you take at 2618. Surges all the way up, but now we're here. Excuse me. Now we're here. Fast forward to today. What's going on? What's about to happen? Clearly, the last impulse was retraced. The last impulse was retraced, and all that matters from here is applying our price action. You know, we're seeing a lot of compressed candles and a lot of overlapping wicks, as you can clearly see. You know, there's a lot of overlapping wicks around here, clearly showing you that, hey, this is consolidation behavior. You know what I mean? This is what I like to call let the price show its hand territory, or let the price show its hand environment, you know. And if we look at our last leg, okay, that was 5. So now what is going on? What are we trying to do? The market clearly hit its peak, went all the way down, and then we established a horizontal right here. I hadn't put the horizontal until it bounced on here. Yeah, because I know this is 200, so it's a very significant zone. So once it went all the way down, and then it bounced on what? It bounced on this. So the best thing to do right now to try and understand where the market is going and look at our price action, clearly finished wave 5. We need to grab our Fibonacci and see how much this retracement is, starting from what? From wave 4. So I grab my fib, go all the way to the end of the price, and you can clearly see this market comes and roams around what? Roams around 88.8 for this leg. So we're looking at this leg. We're looking at this leg to here. It stops at 88.8, which is obviously a significant what? A significant retracement zone. And additionally, it's going to look a little clustered when I put a day, but you can clearly see that the market retraced the whole wave and set on our diagonal from the previous channel. Because here's our previous channel. Yeah, there's our support level, there's our resistance level. You know, it moved through our channel, and then after breaking our channel, where I've put my diagonal here to signal where it broke and then went up, broke our channel, went all the way up to establish new highs, and then obviously had to break. It broke that last resistance of the diagonal to establish a support level on the lower support level of the diagonal, and that's the one I'm measuring, which is 88.8. And so that gives you at least an idea. Okay, the market was retracing this whole impulse. So now it's cooled down. What's the next move? I still think obviously the market still looks like like we said, the larger time frames, still a huge bullish structure, you know. And so what we then want to do, we clearly see the market bounce on our leg and then started going up, and then it has retraced this. So the question is, since we're in a bullish since we're still in a bullish trend, as you obviously see, it came down here, right, established the structure again, respecting our horizontal, our diagonal, and then bouncing our gap over here, which is this dojis over here that are in line with this doji that you see. I'm gonna zoom it in real quick. There's a doji, so the market went down, completely retraced this candle. So if you combine these two candles in 2 days, that's basically a doji, right? So if this is basically a doji, and then comes other smaller candles over here, that would just mean that, hey, there's a whole extended wick over here, and then there's a couple of dojis where the market bounces on our gap on my purple over here, or magneto, right? And then goes all the way to respect 200. Remember when we put our Fibonacci, this is our 200 level, right? This is our 200 level. Let me just put a label on that. See if I could say this is our 200 level, 200% extension level, which is obviously respected, right? That's our level over here. Now the next thing to try and establish, okay, the market then respects our 200 level, establishing a structure of some sort, and then descends down to establish a bottom, right? Leaving a long wick over here, right? The bottom of that sits right on top of our resistance, tend support. Again, I'm gonna say that again, resistance, tend support. Why? Because it was a resistance here that got broken, established at 200, it established a price. What's the price at 200? The market establishes a price at 200, which is 50, which is 5,000. Let's just say for mathematics sake, it's right at 5,000, 5,085. Yeah, establish a rest right here, which is a high, our first initial high, if we're establishing what? A new structure, because we understand the market is going up. We want to buy it at its lowest level. So you may have not bought right here with a market retrace. We're going to look at this in a smaller time frame. You'll see in an hour it looks totally different. So here's our rectangle, our potential retracement zone right here. We're just going to make sure it's visible only in 4 hours and an hour. Maybe do 30-15 all the way down. Boom. All right. So now we want to grab a Fibonacci. Since this is our first high, and we'll obviously label this our high. Let's just say for now it's our higher high. Okay. As those who understand forex would almost label it. Change the color, we'll make it blue. And then we'll say maybe this is our lower high. Because at the end of the day, we can not only can we, I know I'm interchanging the language here, okay? What would be a higher high would be your wave 1, for example. What would be your lower high would be something that would look like wave 2, okay? So no matter the terminology, high, just like a resistance and support, right? Some people will say, hey, that's my resistance, or that's my end zone, or that's my, truncated top. If you know what I mean, like, so long as you're able to understand what's being said, So that's our high. I'll call this my lower high. My higher low, sorry. My higher low. Yeah, it's a low, but it's high. Alright, I'll put this right here. And then I'll grab my Fibonacci. Since we're anticipating, as the price structure is showing us, we're saying, hey, we're in an uptrend, we're anticipating this thing's going to clearly go up. So I'm going to grab my Fibonacci and say, hey, what has this been retraced to? So start from the bottom of the price to the end of the price, and you can see the market decides it's going to put its wick right at the region of what? 61.8. 61.8. So in anticipation, again, something we've done many a times, I'm going to grab my Fibonacci, go from the high all the way to the starting point, and say, hey, it's obviously going to cross 100, aka 200 extension level. 200 extension level of that 4 and 5 leg, right? Which is wave 5. Yeah, from 4 to 5. That leg has a, from wave 2 to wave 3. It has an extension of 200, which is a level that has been respected throughout the market as it shot up with an impulse initially, and then it established 200, and then that's been respected all the way through. But right now we're over here and we're looking at what from this distance down here. I'm gonna call this X. We're gonna call this X. So from X to that higher high, it retraces that higher low, which is 61.8. That's what we said, right? We said this was 61.8 retracement right here in the rectangle, inside the rectangle. 61.8 retracement. So we said that was a 61.8 retracement. Yeah, and then the extension of it would be, it would go all the way. We anticipate it's going to go all the way to 161.8, doubling its distance, right? And so what we're going to do is say, okay, let's get a text instead so it can stay there. We're going to say this is now just 161.8 extension. So this is where you take your first profit. I mean, you take your first take profit at 141.2, and then your second profit at 141.2. But it's the same distance. But it's a game of pips. You know it's an uptrend. You know that the market is anticipating to get there. So we put this over here. 161.8 extension. That's percentage. Okay, this is percentage. If it was a figure, it would be 1.6. Right? So this is just percentage. And the same thing goes with the one at the bottom. So what we're essentially saying with this market, at the spot that we at right now, what we're saying is we're anticipating the market will perhaps dilly-dally. Say dilly-dallies. Change this to blue. Say the market dilly-dallies. But eventually ends up over here. Why do we say that? For starters, because we established it was coming from an impulse, a huge impulse of wave 5. Okay, let's get rid of that. Coming from a huge impulse of wave 5, it retraces that wave to establish our X. Right? A simple ABC. Right? Happens. Establish our X, where we then now structure's broken when it does all of that, and then now it gets back to our structure by respecting what? Or respecting our horizontals. Why is this a significant zone right here? Why are we saying, nah, it's done. It's done going down. Yeah, this is very significant because if I draw as background, over here, not only do we have a diagonal support line, there's a diagonal support line, and the stuff looks a little tiny. You know, this is a scaling issue, is all. A scaling issue. If I go back, it enlarges. Obviously, if I zoom out, let me see if I zoom in, it enlarges. But we're saying this over here is very solid because we have a diagonal support line, right? The diagonal support line corresponds with previous points that we established, and if we look at our lowest points are the waves 4, which are retracements, right, or corrections, rather than retracements. Sorry. Retracement is correction, same thing. Right, it's not a reversal. Wave 4, and then we have wave 2. They all correspond. I should have put these labels as a draw text rather than a text label. That's a correction I'll make in the next section. So yeah, they correspond with X corresponds with 2 and 4. Yeah, and the starting point obviously of wave 1. So that's clearly respected. And then the market, what else? The market also respects what? Respects the gap that it made over here when it started its impulse wave to 5,000. Yeah, clearly. So it bounced at 88.6 of wave 4. So from 4 to 5, the retracement is what? Is 88. And then from 4 to 5, the retracement of that leg is 88.1. Let me put that as a text right here. Okay, 88.8.6, right? I think that was it. 88.6. We just leave it at 88.6. Oh, 88.2. Let me check that again. It's always good to check stuff again. This is pure analysis. So if you're not familiar, 88.8. Perfect. Okay. If some of the stuff that I'm talking about here is a little confusing, please look at our previous videos and just hit something on the comments. We can always break it down one-on-one. We have a Telegram channel where we help individuals trade. It's 88.8. That's what I said. Okay, perfect. But yeah, there's a Telegram channel. It's on the link. So it's on the, we have a link on the below the video. So just hit that link, check out the channel if you want to learn more. But this is our 88. So that's where X is. That's where wave 5 and 6 are retraced. Yeah, establishing that, hey, this is a very, very solid support level where we have a horizontal and have a diagonal, and then the market pushes up. It respects our diagonal support and also respects the gap that it made in anticipation of the dojis right here. From there, it pushes up to establish our first higher high, and then comes back to bounce on our diagonal support level. So resistance 10 support level, and then we see 1, 2, 3, 4 bulls in 4 hours. So I'm going to trim it down and go down to an hour so I can see exactly what is going on. All right, I've zoomed it out a little bit. The labels stay the same. Okay, that's not going to work out because this keeps changing. It's not stuck on the text. So we're going to say, we're just going to put 200%. You guys already know what's going on. 200. And then I'm going to delete this and say 161.8. Let's say 161.8. That's easy money. 0.8. And then I'm going to hit OK. Oh, that's a comma. Okay, a comma works, don't it? All right, perfect. 161.8 over here. That's what we have. We have 200. These, they'll be fine. These will be fine. All right. So we established that. Okay, that's our HH. We gotta read about HH over here. Put a new HH. Again, I'll remove the labels and just put lines so it makes much more sense. I think if we just have lines, it's a lot better. I'll delete this, and then we'll do HL right here. HL. Okay, boom. Easy. And so what did we then say? We've zoomed in. Now we're looking at an hour. We came from 4 hours. I'll grab my Fibonacci again, try this so I can see what my retracement is, 61.8. And then I know, all right, the market clearly moved from boom, from here to there, from here to here, and then now we're basically shooting up. I'm double whammy these ones. Now we're basically shooting up. Okay, so what I'll do is, if I were to enter this, I'm gonna delete that. Let's delete that again, and then we'll just do this. Obviously, it's gonna dilly dally. Okay, the market will always dilly dally. All right, that's our 61.8. We established that. Let's do this. 61.8. Perfect. 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 So what I do, well, how would you enter this? Those who use those fancy what do you call it, fancy platforms, like if you have like if you have TradingView is very, very, very good. TradingView is very, very good. So if you had TradingView, you'd be able to do the risk assessment and everything. But I would say your stop loss, if you're not in this trade already, or if you are in the trade already, your stop loss should be roaming around here. Let's get our crosshair. So if you're in the trade already, your stop loss should be roaming right at, again, we're swingers here, okay? We do long trades. We don't, we scalp oftentimes, but mostly it's long trades. I'd say your stop loss 4692. That's where your stop loss would be at, 4692, because that's the last dip, because the market is about to establish a different structure. Let me put 30 minutes and remove these. You will forgive my my diagonal here. I don't want to get rid of it just yet, but you will forgive it. What I can do is maybe shrink it. Let me see if I could go and take it out of the equation like that. Okay, that looks much better. Because I could calculate waves here, but I'm not gonna do that. But what I am gonna do is just maybe walk you through it and say I got 1, I got 2 here, and it looks like I established 3, and then 4, and then 5, and then I go zigzaggy A B C, like a double ABC. There's zigzaggy A B C before I start again establishing some kind of wave structure. Because if I do 30, I'll even get a better picture. Yeah, so you can clearly see. Yeah, I gotta get rid of that horizontal line. It's distracting the rest of my data. Let's do this. You guys clearly understand what we've worked towards here. So now we're just gonna clear the air a little bit. I'm gonna do 15 minutes. I'll stay at 30, I suppose. And then from 30, if you entered the market already, you're in a great position. Then I'll do that. Clearly the market was retracing, right? When the market is a little choppy. So here's how I do my analysis of the time, how to tell, okay, is this market going uptrend, downtrend, or like what's going on? Is it where is it trending towards? You know what I mean? Because the market moves. So if the market moves choppy and takes longer, so so for example, I'm just saying like it is. This is a choppy market. That's how you tell waves that are retracements or corrections. It's choppy. It's got too many ups and downs. The market is like, if you put like 4 hours, it looks like just one small candle of a small retracement. So if I go back to 15 minutes, I was at 30. Market clearly looks choppy. Over here, we've highlighted the trend it was moving at. It was coming from down here. Jesus Christ. Yeah, I don't want to lose my bearings. Yeah, we're good. This is 30 minutes. That's our retracement. That's our retracement. Boom. Right? And then from there, we establish our first points, points of context. Now we're starting, that's a full retracement right there. Now we're starting the impulse phase. 1, 2, 3, 4, 5, and then we're correcting all of that. And how do we correct that? We correct it at 61.8, like we've said. Yeah, we gotta whisper sometimes when we're getting this money, right? Like we've said, 61.8, and then from there the market keeps going. So if you want to move your stop loss, right now the price is at 4.4947. You can move your stop loss to the end of the end of the trend, where it breaks the trend. So it breaks the trend right here, right? And your stop loss would be around this region. If you're swinging, because if you look at an hour, you're good. There's a lot of bulls here. The bulls have gained all the momentum. So it's just basically a bullish continuation, and it requires a lot of patience. Okay, the market, you just keep moving your stop loss. Like again, if you've entered the market already, where would you have entered your market after hitting 61.8? Because you understood, hey, there's 61.8, there's a region where it's supposed to bounce, there's the gap, there's the dojis, and then you have your candlestick structure, you have your Fibonacci, and then you've done the low analysis of drawing down your horizontal, your channel, and you can clearly see where the market is going from there. So I would say, if you're in this trade or anticipating to get into this trade, the market will dilly-dally all the time. Okay, it's not going to move in a straight line unless there's something going on. But then everybody's going what? Everybody's going gold. Bitcoin is crashing. Well, most people say it's crashing. I can tell you one thing, the price is low. If I pull up a chart of Bitcoin, I'm pretty sure we could do some some technical analysis, just like we're doing for gold, okay? Technical analysis, the fundamental stuff is what moves the market, but you're only going to understand it technically, right? Unless you got big money, you can put $1 billion and you can hold that position. The market will keep swinging and you will still be in the money, And so, your stop loss or your entry point is around the region of 4,800. Anywhere there, and once it passes 5,000, that's it's a go for anybody to buy, because it's going to be now attracted to 5,600. It's still a bullish market. I repeat, it's still a bullish market. So that's gold. I want to move on to EU, which again, like I said, it's majority analysis. There's not going to be much talking interaction between me and the video in terms of talking, but I'll just do some analysis, let you guys enjoy some music. Let me put it back. Let you guys enjoy some music, and yeah, I'll show you the entry points and the exit points, potential exit points. So, going back to gold, we just finished an hour right here. The next hour I think is 4 hours. I think it's in the next hour right here. That's 4 hours. That's how it looks like. I'm gonna delete this, get rid of some of the labels. That one is all right, and I'll put an hour so the road is much clearer about where we are going. Where we're going. Yeah, the market will respect this region. Okay, it will respect this region. It will respect that region. Okay, it may not break all the way at once, but it will break, and then obviously ascend all the way. This is 15 minutes. I gotta get 30 minutes. Let me put a price on this. My price would be on the left. I'll just put it right here. So I'd say anything towards 5,500 is a good take profit. That's where our 1618 hit, I believe. Anything around that region is good. Take my crosshair. Anything around 5,500 is good. So anyway, here you should be good to take your profit. Again, the market will continue going up. It's just a matter of anticipating the swings, where the swings are going to happen and where the swings are not going to happen. All right, moving along. This is EU, just a brief, very, very brief narration on EU. Initially started trading EU back in 2018 even. 2018, and did my analysis, as you can clearly see. So what I've done with EU, I've broken it down into verticals, which is basically highlighting where the market is, establishing a new trend or changing direction, all the way. So if I'll just bear with me, we got from 2020, let's say 2018, downtrend all the way to 2020, and then we establish an uptrend until around here where I don't have a vertical, and I believe that's 2021, the beginning of 2021, if I put my crosshair right here. And then from that January, we descending down. I think gold, not gold, but EU goes into parity with the dollar in And then from there, 2022, again, this is COVID times, right? This is all COVID times and all that stuff that was going on. Lots of money printed in the United States. And then from there, 2022 all the way to 2025, it really didn't change much except for stay within this region. I'm not going to focus on this. What we're going to focus on today is this region from 2025 January to now, because now we've established a year, right? Now we had a year, just January was just here, and so it's a matter of whether it's going to continue the trend going up or is it going to continue going down. Okay, so you bear with me as we do the analysis. First things first, this is the week. I'm just going to go through the time frames. Everybody will establish a buying point. Everybody will establish where the trend is really going. It looks like it's in an uptrend. EU is definitely in an uptrend. It's how can I put it in layman's terms? What I've done is I've broken it down again with my horizontals, from the past analysis, and some of the points do correspond with what's going on today. So this is a week. I'm gonna walk you through it. This is how a week looks like. Let me get rid of that rectangle we initially put on there. This is how a week looks like. This is how a day looks like. Yeah, as you can obviously see, it's respecting the horizontals. It's moving within the structure. This is how 4 hours looks like. This is how an hour looks like. Again, we are more focused right here. Everything from the start of the trend is going to tell us exactly where we're going. And then what we're going to do is do a rectangle. Do not draw as background. Just one more thing. Let me go back to gold, because gold is very, very interesting. I'll do 4 hours. And I'll do a day. I'll do a day is something I want to see here. Okay, let me zoom it in. Bear with me. Yeah, this is a perfect structure. We're still going. Yeah, the last week was bearish, and this week is very, very, very bullish. And you got them long extended wicks. So should have bought it, man. Should have bought it. You can still buy it. I've seen some Japanese videos. Actually a DW video where they're looking at how Japanese women are trading. It's crazy, man. It's crazy. Because you can scalp this thing, you can do long trades, you can hold. This is a live market, by the way, as we've always seen. This is live server from LMFX. I'm not promoting brokers or anything like that, but LMFX is not bad. That's the one I use. Okay. Let's look at EU. Okay, going back to EU. This is how an hour looks like. This is how 30 minutes looks like. And we're going to do all the analysis for this. Okay, all the analysis will lead up to this. Where are we? We're in a bullish market. I think it's almost done, but we're in a bullish market for sure, as you can clearly see in a week. All right, so please enjoy the music. I'm just gonna firstly walk through this one with the waves, and then we'll do some chit-chatting afterwards. I just want you to enjoy just pure analysis, just pure simple analysis of stuff being laid over on a chat. Okay? All right, thank you. chat again. Let's chit chat again. What I've done is just basically draw down, write down, just label all the waves, that I can see, and I was just having a little bit of a dilemma towards the end, simply because I think it hasn't established a wave 2 yet. Because bear with me. So if you look, okay, let's just walk through this real quick, okay? If you look at the blue stuff is the bigger, broader stuff, okay? That's 1, 2. I think the retracement here is like 88.2. Let me just do 4 hours. Make sure I confirm that for you guys. Let me move my stick because that's the dip. So my retracement over here is like 88.8 on the money, okay? 88.8 on the money, which gives me an extension. So I have to have a valid point at 161.8 as I'm going through the data. I'm combing through the data. Clearly it breaks 100, and then 1618, 200 respects it, 2618 respects it, pi, it respects it, all the way to 423, 423.6, all the way there. So I'm gonna delete that. Let's delete that and let's have a look. So we established wave 1, wave 2. Within wave 1 there's an extension of wave 3. So you would have 1, 2, 3, which is a retracement of A, B, C. 4, 5, which then makes our wave 3 of this impulse. And then from wave 3 we get a wave 4, which obviously this is some form of retracement. We can capture this with a simple diagonal half the time. Let me see what kind of retracement we have here. I'm not going to really put too many labels on the kind of retracement we have here, but this would work. If I move my data, let's see if I move my data a little bit and kind of respect the regular stuff that's going on. All right, nothing really fits or sticks over here, okay? So we're just going to put a line just to respect what's going on, like that. So we're respecting the whole data and recognizing, hey, the data stays within this boundary. If we look just to confirm what kind of retracement that is, we go from 2 all the way to 3. It's gonna give us 38.2. It's valid. The first one, it alternated, right? The first retracement was like really deep and sharp of wave 2, and this is an alternation which is like pretty much flat. So we establish wave 4 and then go all the way to establish what? Wave 5. And then obviously within this we can calculate, we can definitely label wave. I can clearly see wave 1 over here. If I can grab my blue, do 14 is good. Text edit. We need to change this. We're just gonna go Roman figures on this one and do 1 and say 1 looks like it's retraced over here. 2. This is now just from looking at it, right? Just from looking at it, and then we'll put our measurements as we go along. And then I'll say we establish 3 here, 1, 2, 3, hit OK, and then we establish 4 over here. Clearly doesn't get to the price territory of what? Of wave 1, 4, and then we establish obviously our 5 over here. We establish our wave 5 over here. See, now let's see if it all makes sense. Within wave 1, what do we have? 1, 2, 3, 4. Like, we can even go deeper. This is crazy. For the establishment of wave 1, okay, so wave 1 is from here to here. Why is it valid? Let's grab our Fibonacci. It retraces at 50. Let's see how extension looks like. Our extension should give us at least 1618 of wave 3, and 1618 of wave 3 is right on the money. And so I'll delete this, and then I'm gonna try and do I'm gonna try and label this wave within this wave here, and I'm gonna do 1. I'm gonna put this in brackets, and I'll make it black. I'll make it black and say that's wave 1 over here, and then I'll do wave 2 over here, wave 2, and then I'll do wave 3 over here, clearly 3, 1, 2, 3, and I'll do wave 4 over here clearly, wave 4 over here, and then obviously it concludes at what, at 5, to form what, to form the first wave 1 in the Roman what, in the Roman figures. Again, you can trade this, you can scalp this, you can do whatever you want with it. It's just a matter of you understanding. So if I'll walk you through just the segment. So right now what we've done is, if you look at a day, in a day we've got wave 3, wave 4, all the way to a 5, but within 4 and 5 obviously that impulse has waves, right? So that impulse is firstly an extension of wave 1. All these things I'm talking about you can go on and search about, or we could pull up a YouTube page. Let's have a look. Let's see if I have anything. Not a YouTube page. We could pull up a web page, and I'm just gonna say wave 3 extension. You know, just wave 3 extension. Wave 3 extension. Wave 3 extension. So third wave extension of third wave extension. That's crazy. Okay. So let's pull up something that's gonna mirror so we can have a look here. Okay, checking browser, running all the EURUSD.com stuff. Perfect, successful. Yep. Okay, let's see. Okay, so incorrect counting, 1, 2, 3, 4. That will be incorrect. Incorrect counting as well, 1, 2, 3, 4. The correct counting would be 1, 2, and then 1, 2, 3. So wave 3 is not here yet, but this is just too complicated. I'm just gonna zoom in on one that's very simple. I want one that's very, very, very simple. Why can't they give me one that's... Okay, here's a diagram. Perfect. It's a GIF. Okay, and then we're just gonna zoom it in a little bit, zoom it in. As you can clearly see over here, what you have is wave 1. Okay, on occasion one of the impulse waves can extend. An extended wave will be constructed more than 5 internal waves, and blah 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 blah. Extension in wave 5 is also very common, right? An extension in wave 3 and an extension in wave 5 is very common. So what we have here, the first one's an extension in wave 3. The red in brackets is bigger, is the bigger wave. So you have 1, 2, 3, 4, 5. But within wave 3 you have 1, 2, 3, 4, 5 to make what? Wave 3, and then 4, 5. Same thing over here. 1, 2, 3, 4, 5. So what do we have here? 1, 2, okay? And then it looks like you're studying another wave within that, which is 1, 2, right? We haven't gotten to 3 of the green, which is the bigger wave. Now we're in the red, but within the red there's another wave, 1, 2, 3, 4, 5, which establishes wave 3 of the red, and wave 4 of the red, and then 5, and then wave 5 of the red also established wave 3 of the green, which is now 4, 5. So that's how wave extensions work within what? Our wave extensions. It's an extension within an extension. It sounds crazy, but we've got some very good material you guys can look at, and you can be able to basically be in tune with what's going on. Okay, this was just me illustrating that. So what do we have? Wave 1, we do the retracement of wave 4, and then we start 1, 2, 3, 4, 5, establish wave 1, 2, 3, 4, 5, and then establish wave 5 of the pink and wave 5 of the blue, which is our what? Our bigger wave. Same thing goes with what? Our correction that I've highlighted over here. Oopsie, doing too much now, and I'm just gonna zoom in, keep it in a day, or maybe I'll zoom in, keep it in 4 hours. Let me see if I can find it. Okay, I need to zoom out. If you look in 4 hours, I've established I have a W. I'll zoom out a little more. I have a WXY, which is marked by an ABC, W, ABC, X, ABCDE to make our Y, right? That's what we call, for example, there's all sorts of corrective patterns, okay? There's flats, there's this, there's that. I'm just going to do the same thing we just did 2 seconds ago over here, not a secure place. And I'm going to do, just type corrective pattern in an earlier corrective. Yeah, let's say corrective pattern, and then you can see there's ABC correction, flat correction, and there's a contracting triangle correction. Now sometimes you may have a combination of these, so like a double. If you can see, I'm gonna zoom in here real quick. Okay, maybe I should get in the picture. Okay, we're gonna get in the picture here. And no, truncated fifth. Look at that. These guys have a truncated fifth because of the third wave. Look at that. That's not what we're looking for. What we're looking for is right here. This is a double three example. So you have an ABC which establishes W, ABC which establishes X, and then ABCDE which establishes Y, which is basically a combination of corrective patterns, and we see that every time a market is moving diagonally. And so if we go back to our EU, our market in a day, I'll zoom it back in so we can be clear. Our market within a day was moving diagonally after a huge impulse. So if I'd put verticals over here, I'd say, whoa, it was going and then it stopped. And then it looks like just now it's going again because everything has been kept within this bandwagon. I'm just going to bolden this a little bit so it's much bigger than the rest of it. Bolden a little bit so it's much bigger than the rest of it. Yeah, so it was within this region where it stayed, it was locked in, it looked like it wasn't going anywhere. Okay, now that you guys have seen the Elliott wave and how it works and how it's helping us get to this region right here, because this is the region that's most important, how we're trading. We've established our wave 1, we said, and we've established our what? Our wave 2 right here. And so I would confidently say then, okay, because this cannot be wave 3 and this cannot be wave 4 because it's coming to the price territory of wave 1. Again, we have materials about learning all these things, why these rules exist on Elliott Wave. I'm just right now trying to just help you understand where EU is headed and what is going on. So I can confidently say, okay, there is a wave 1 within here. And I'm going to call it wave 1 in parentheses. And we'll label this, we'll keep the magneto that we have. We'll say this is 1 in our label, and we'll establish 2 right here. Put 2 in parentheses because we're not sure, because this cannot be wave 3. It doesn't get to the price territory. You know what I mean? Like the rules, Elliott Wave rules. There's a good piece of literature by Pritchard, A.J. Frost Pritchard. Very good piece on Elliott Wave. Talks about the rules, talks about Elliott Wave structure, and that also incorporates our horizontals, incorporates our, your support, resistance, and all that stuff. And so as you've seen so far, we've only been talking in terms of Elliott Wave, but as you can see, everything is moving structurally within our lines, okay? And so even here, we can calculate our waves, our 1, 2, 3, 4, boom, 5 truncated top, and then obviously we're retracing slightly over here. If we wanted, we could grab like a channel, because this thing is moving within a channel. At the end of the day, breaks your channel over here and then pops out. Hence why we have our vertical highlighting that, hey, maybe now we're starting to actually go up top. So I'm gonna do this back in 4 hours. I'm gonna delete this. Bear with me here. Bear with me. And then what we're gonna do, okay, what we're then gonna do is, all right, how far has this wave 2 been retraced, right? Because we're trying to understand. Remember, we said this was a potential retracement zone, or let the market play its hand environment, as I'd like to call it, right? Let the market play its hand environment. All right. Let's do a day, and then we'll move our truncated top. Oh God, let's go move our truncated top label and just put it to the side here. Now what I'm gonna do is do a day, and then what we're gonna try and establish is the retracement of this wave 2 here that we've now labeled, because if we look at wave 1, let's see wave 1, where wave 1 is retraced by wave 2. It's retraced at 61.8 on the money, between the region of 61.8 and 78.6, which is a good place. Now let me see the extension, see what this level is, because that's going to help us establish what that level is. There we go. Oh, no. That was a bad starting point. Okay, zoom the data out again. Fibonacci, where are you? Here you are. Grab you from the bottom. We go to the top and we establish 61.8 on the money, and we can conclude, we can gladly say, you know what, this is 61.8 on the money. Okay, grab our label, we say 61.8 on the money, 8% on the money. Okay, 61.8 is good. Okay, 61.8 is good. We hit blue. Blue's a good color. We hit okay. We leave it right here. We get rid of our Fibonacci, and then we take our Fibonacci from the start of wave 1. Again, this is wave 1. This is wave 1. This is wave 1. This is wave 2. Okay, the starting point is right here by Y. Yeah, so we've grabbed our Fibonacci. So now this 61.8 from Y to 1 is 61.8. Okay, Y to 1 is retraced to 61.8. From there, that's established already, so we don't need to trip too much about that. Okay, we can ignore this point right here, which is also significant, but we can ignore it for once, because here's where we're starting. Now let's grab our extension to see how far up it goes. We take from the truncated fifth wave to the bottom. We see that that's 161.8. That's where wave 1 is at, which naturally makes sense, right? We traced at 61.8, and now we're extending this whole thing to what? 161.8. Again, this is pure price action. Like Elliott Wave is just price action too. Okay, I know I haven't mentioned price action yet, but all of this is just pure price action. That's all it is, pure price action. Okay, moving along. This is 61.8 extension, so we can do the same thing over here and say 61.8, 161.8 extension. Perfect. Okay, we've established that. We can move the 61.8. It's right here. We take a rectangle, we mark it. Okay, that's the region of 161.8. We take the price, we mark it. That's 161.8 of, remember, we'll call this 1.2. 161.8 extension of wave 1. Okay, of this wave 1, this one right here. Has it established our wave 2 yet? We don't know. All we know is it's wave 1 for sure again. Okay, because we know we are yet to establish more points in the market. Okay, delete our extension so that we can have confluences. So now what we're trying to do, I'll zoom back in. Now what we're trying to do is understand this point right here. What is this point right here? We've understood this retracement was 61.8. We went all the way there, right? The extension of that was 61.8. Now let's grab our Fibonacci and see what this retracement is. We go from price to price. We're like, oops, look at that, 61.8 on the money, right? This rectangle is now going to be expanded. It becomes the most important part of the market, right? Where's this 61.8 located? Right at our horizontals. That's excellent. Right where our last thing was truncated. That's excellent. 61.8, right? So let's delete this and now focus on our price action and focus on our candlesticks. Yeah. Let's grab the fib again. I want to grab the fib again so we can see what the retracement is. 61.8, perfect. Now let's go from a different starting point of Y to all the way there. What do we get? It looks like it's a confluence. I'm going to label that confluence right here so it's more solid than the rest. It looks like it's a confluence of 50 and 61.8. So we're gonna do draw as background here, and then say okay, and then we're gonna put a label at 2 and say confluence. No, we'll say 61.50 and 61.8 confluence. I just play confluence. Yeah, there you go. Okay, and then let me check this here, and then we'll say okay, obviously. Convergence. Why am I saying confluence? All right, let's what am I saying? Let's correct that. Convergence. They converge, right? Convergence. Okay, and so that's 50 and 61.8 where they converge. Let's move the comma and put a full stop instead. 61.8. And so we know now that this is a very strong retracement zone, a potential retracement zone, or PRZ, whatever you want to call it, or an area of where the market changes hand. This is what, you know, wave 1. We're going back to the simple labels now, okay? Of HH, wave 2 is what? Higher low, right? Higher low. Yeah, lower high. I think it's the other way around. Yeah, you have a higher high and a higher low. So it's low, but it's high. Okay, higher than the previous previous high, no, previous low, higher than the previous low. Okay, and so same thing over here. We've got an HH, higher high, and then same thing over here. We've got a what? An HL. Right? We've got an HL. Yeah, I'm going to put these in red so they can be more pronounced. I could do that. It's too many colors, but we'll be all right. Different labels, because we over here now the rectangle is only 60 pips. You're a swinger. If you want to scalp, you can scalp through it, but you're a swinger. You're just waiting. You're honestly waiting for the. You're waiting for the rectangle to pop. And because you're bullish bias, with the evidence that we have, we're very bullish bias. So it's not, it no longer becomes a 50-50, but rather we put in more on that 50% because we know, on the other bullish 50%, because we know exactly what's about to happen. We're about to establish wave 3. Where are we going to establish wave 3? We're establishing wave 3 all the way over here. And this is what I call the magnet level, where you already know the market will break, obviously, the 100% point, right? This is our 100% point. It will go and break 161.8 and shoot all the way up. How does this look in a day? Here's how this looks like in a day. We've got our convergence down here. And then I put it back in 4 hours, zoom it back out a little bit so we can all get a clearer picture. We're coming from Y. Remember, we establish our wave count. We establish higher highs and higher lows and higher highs and higher lows. We establish that it's wave 1 and wave 2. And also we establish it's 161.8 and 50 and 61.8 what? Retracement. And so, lots to unpack, not too much, because I think it's pretty much self-explanatory. And I think, obviously, man, we need a horizontal right here. Damn. Come on, man. Let me see. This baby, if we were dancing right here, that'd be nice. That'd be a nice baby to dance with. Or maybe right here, right? Right about here. But we haven't done that. I don't think it. I think it's invalid. If I were to put one, I'd do. Let me see. Just for control. Say I put one right here. I don't think it's showing me anything significant. It is. It's good. I think it is. It's showing me something significant. Alright, because the market clearly bounces on this point. And, you know, it respects it previously as it's moving along. So we're just going to put it in dim gray. I like it, but I don't. But it's valid. For the data that we're working on right now, it's very valid. Okay. So HL, you know, so again, if we're going back to the simple language of price action, we understand we're looking at, hey, the market, zoom in, the market comes from Y, and then from Y establishes its first high, bounces down, and then all the way to its first wave 1 with a truncated top. We've got our wave count, and then descends, obviously, as you've seen, descends to establish what, our wave 2, which is our support level, and then shoots all the way up to establish, to break the resistance here before it comes back to what, to kind of dilly-dally around it, so these are your key support levels, obviously. 1.180 I would say is a key level, or where our Fibonacci landed, which is 1.17. That's a key level. Again, perhaps I stand to correct my line, so for example, if I dragged this line and put it down here, it would give me a what, a totally different picture of what's going on, right? It will give me a totally different picture of what's going on. I like it the way it is, to be honest, because it respects all the other points. And more than anything, if I do 4 hours and we keep track of the same line, it looks good. I'm not gonna lie, it looks good. Keep track of the same line, okay, it's not bad. But I just don't like it when I don't include all my data into yeah, okay, we'll keep this dim. I'll probably get rid of it later, but you guys get the gist of what's going on. So please trade carefully, okay? Trade very carefully, and if you know, hold your winning trades, and cut off your losing trades. Okay, let's go back 4 hours. That's the situation in 4 hours. Okay, I'll keep it like this for a little while for our understanding, our peace of mind. 4 hours looks like this. You're just waiting for the pop. Essentially, it gapped here. I would say the market escaped here, right? And went up, established a high, and then came back and respected that region, expected that 61.8 region. So it's very, very important. Let's put an hour so you can see what we're dealing with. Here's what's going on in an hour. It's cleared our support level. Yeah, that line did change a lot. Cleared our support level. This is not a line, this is just highlighting 161.8. If I go back to 6 hours, it's highlighting 161.8. And so when you're looking to trade, like I said, I'm gonna put the prices on the boxes here, on the box. Down here is your stop loss, and then up here is your where you can enter. Just 10 pips above that price should set you good, because that's our rectangle, your PRZ. In 4 hours is how it looks like. That's your PRZ, and that's your first what? Your first take profit. Your first take profit would obviously be somewhere around here at 1.2 flat, I would say. And it's Friday. Probably market will gap again, who knows, but it's very bullish strong. If it does go down, you are obviously anticipating that if it breaks below this 1 point, then that's invalidation, right? Because exactly where it's going to come and sink. So if I were enticing folks, I would draw a PRZ like that and draw arrows like that and ask you, hey, where the hell is it going? I will take a screenshot of that. Perfect. All right, guys, you take it easy. Please enjoy the analysis. It's Friday. Market is surging up, as you've seen. Since this has happened, market has popped up. EU still staying in the same region. We've got UJ that I analyzed, which I think is gonna go down eventually. Right? It's gone up way too much, and I think it was trying to establish a. Yeah, we'll see. GU is going up, obviously, as always. That's the British pound, and if you don't know, this is gonna go up. Don't worry about these crazy lines. I got crazy lines over there. Analysis needs to be done. But yeah, that's it, guys. That's how EU looks like. Please trade and trade safe. Again, we're bullish strong. Okay, we're bullish strong. Let me see how a moving average looks like. About 200 EMA. We're right on the money on the 200 EMA. So 61.8. There's a lot of valid points that would make you want to buy here. So I would say trade carefully, and all the best.